Since there already are hundreds of EV manufacturers in China, some of the top Chinese EV companies are now looking outward for expansion. This course of action seems to be the most logical way for companies like NIO to increase their growth and capture more markets. However, as the world of EV manufacturers became more complicated, so did the pushback from competition have become harder. As you may have heard, Chinese EVs and consequently NIO have been facing issues regarding very high tariff rates. And as if to add more salt to the wound, the EU has recently implemented a tariff that's specifically made for BEVs, or battery electric vehicles that are from China. This will hurt NIO greatly. Why is this happening? Are the rumors about huge manufacturers blocking the growth of NIO and other Chinese EVs in Western markets? What will happen to NIO now that these tariffs are in place? Well, let me explain. Disclaimer: Chinese electric vehicle maker. NIO has had a particularly tough year, emerging as one of the most challenging stocks in its sector. With its stock down over 58% year-to-date, NIO has struggled to find a solid footing amidst a barrage of challenges. Although recent delivery reports offer a glimmer of hope, the stock still lacks a strong catalyst to fuel a potential recovery. NIO's challenges stem from multiple fronts. In its domestic market, the fierce price war among EV makers has forced NIO to slash prices in an attempt to maintain its sales momentum. While this strategy has boosted sales numbers, it has come at the expense of profit margins, putting the company in a precarious financial position. The price cuts reflect a broader struggle within the industry, as many of NIO's competitors have also resorted to aggressive pricing strategies to survive in an increasingly crowded market. Moreover, NIO's problems are not confined to China, and this just might be the bigger problem between the two. The company faces significant pressure from international trade tensions, particularly from the United States and the European Union. The imposition of tariffs on Chinese-made electric vehicles, including those from NIO, is a major blow to its global ambitions. The European Union's decision to impose over 37% countervailing duty on Chinese battery electric vehicles is especially damaging. And as you may already know, NIO is at the forefront of developing battery-powered EVs and has also spearheaded the battery swap technology that its users are enjoying today. This move follows a 9-month investigation by the European Commission, which found that Chinese EV manufacturers benefited unfairly from government subsidies. Exactly how much is this so-called financial advantage did Chinese EVs get from their government? New research shows that China's electric vehicle industry has received over $230 billion in government subsidies and aid from 2009 through the end of last year. While the amount of support per vehicle has decreased, this funding, primarily from sales tax exemptions, buyer rebates, infrastructure funding, and R&D programs, has fueled the industry's rapid growth. It's this support from the Chinese government that has also allowed NIO and the rest of the Chinese EV brands to thrive. However, this significant government backing has caused issues for companies like NIO in international markets. For NIO, these tariffs are a major hurdle as the company seeks to expand its presence in Europe and beyond. Do you think NIO and other Chinese EVs have an unfair advantage, and EU and US tariffs are only fair? Let us know your thoughts below. As you can imagine, the added costs and potential market barriers could diminish NIO's competitiveness outside of China, complicating its global growth strategy. This situation underscores the challenges NIO faces, balancing strong domestic competition with increasing resistance in international markets. As Western nations push back against China's subsidies, NIO is caught in the middle, struggling to sustain its momentum on the global stage. This scenario spells significant trouble for NIO and its stockholders. The combination of domestic pricing pressures, international tariffs, and the lack of a clear recovery catalyst creates a challenging environment that could further erode investor confidence. NIO's once promising trajectory now appears increasingly uncertain, and the road ahead seems fraught with obstacles that may continue to weigh down its stock performance. So where does NIO go from here? Well, it seems like the company just won't stop expanding into Western markets and still has a strong presence in the EV industry outside China. And the EU's strict implementation of other rules outside of their heavy tariffs may even play into NIO's favor. How so? Well, beyond the increased tariffs, Chinese EV makers face more competition next year as the EU's new emission targets come into effect. Automakers will need to reduce their emissions by 15% from a 2021 baseline, pushing them to sell more all-electric models. While European car makers are also moving into the EV space, their offerings tend to be more expensive and less technologically advanced compared to those from China. And guess which company has been dominating in the all-electric vehicle sphere? You guessed it, right? It's NIO, with their battery-powered vehicles and battery swap tech. Several European manufacturers are set to launch new models next year, which, according to some analysts, might keep the Chinese EV market share steady at around 12%. Meanwhile, Beijing is attempting to negotiate with Brussels to avoid the proposed duties. But talks have been rocky, with China resisting the EU's claims of unfair subsidies throughout the production chain. Chinese export associations argue that the EU is becoming less attractive for investment. This situation, however, could work in NIO's favor. As a company already producing all-electric vehicles, NIO is well-positioned to benefit from the EU's stricter emission targets. While the increased competition is a challenge, NIO's established presence in the all-electric market gives it an edge as European automakers scramble to meet the new standards. On top of this, NIO's growth outside China has also been astronomical. Let's look at their numbers in the recent news about their sales in Norway. A user on X has shown NIO's numbers in the country. Keep in mind that this is a new market for NIO, and yet they're already selling 7 models that have sold over 2,400 units in total. NIO's presence in the EU has also increased as backed by their infrastructure. Recent reports showed that NIO already has 52 battery swap stations in the EU and is continually growing in number. One of their latest stations is located in Norway, which means that NIO users can enjoy swift battery swapping, especially those who will be traveling from Norway to Sweden and vice versa. Now imagine the rest of their partners using the 52 battery swapping stations in the EU, from brands such as Changan Automobile, Geely Holding, Jack Group, and Chery Automobile. These companies' presence in the EU remains to be seen if they're going to be huge there too. But one thing is for sure. If they do enter the EU market, NIO's stations will be increasing in profits. This only goes to show that NIO is really strategic when it comes to their investments. Another sign that NIO's expenditures in the past years have come to fruition is in their rankings in the world of EV. Among all manufacturers worldwide, the company has ranked 19th in overall sales from January to June in 2024. Keep in mind that NIO is only selling pure EVs, unlike the rest of the brands on this list that sell hybrids and other types of EVs. NIO's ranking is also impressive, given that they're able to play with companies that are bigger than them and have capitalization and financial backups that are way bigger than theirs. NIO's newness in the market didn't become a handicap for them, and their strategy of focusing on novel technology along with impressive software and AI has made them a force to be reckoned with in the EV industry. How about you? Do you think NIO should continue pursuing their route of expanding in the Western market, or should they focus on other markets instead? Let us know what you think about this. If you want to learn more about NIO and the EV industry in general, you can also click on any of the videos on your screen. And lastly, it would greatly help the channel grow if you interact with the video. Leave a comment, and share this with your friends if you like them to stay updated on the latest happenings with NIO. See you in the next video.